If you think property prices in Australia are expensive right now, a major economics firm has made a shocking prediction about what will happen to property prices in our capital cities in just the next 3 years. What's even more interesting is that these predictions are backed up by some of the major lenders. Today, I'm going to share with you exactly what these predictions are for our various capital cities, and as an investor or someone looking to buy property, how you can take maximum advantage. Hello, it's Nero here, and let's begin by looking at what Oxford Economics Australia, a large research house, had to say about property prices. Sydney, the median house price right now is $1.369 million according to PropTrack. Oxford Economics Australia expects it to be worth $1.93 million in 2027. That's only 3 years away. Melbourne, the median house price is $915,000, expected to rise to $1.28 million. Brisbane, $895,000 now, expected to rise to $1.21 million. Adelaide, $775,000 median house price right now, expected to rise to $950,000. And Perth, $707,000, expected to rise to $1.05 million. Now you might be wondering, how is this possible when property prices are already so expensive and housing affordability is at record lows? Well, it all comes down to just one thing: not enough properties. Undersupply driving prices. Marie Kilroy, Oxford Economics senior economist, said that you have a fundamentally undersupplied market, and with net overseas migration running at 500,000 people, a growing participation by foreign buyers, downsizers and cash buyers, demand has outweighed that drag that interest rates would typically have. Expectations of rate cuts later this year have also propped up buyer confidence in early 2024. Now let's have a look at this undersupply issue and see if we can work out how to take advantage of this if you're looking to buy an investment property. First of all, we know where most of the demand is coming from. It's immigration. As you can see from this chart, migration has been operating at above average levels since really the year 2000. Obviously, we dropped off during the pandemic, but now we're at massive record highs. Just last year, we brought in more people nationally than that live in Canberra right now. And with all that demand on property, that's why we can see the vacancy rates nationwide are dropping through the floor, as you can see on this chart. Then, because we don't have enough properties available for the number of people who just want to rent, that's forcing rents higher, as you can see in this chart. So we know then that we have massive demand, but what about supply? Well, supply comes down to two factors. Number one, the number of properties available for sale, or the number of listings, and then number two, the number of properties being built. Let's first look at the number of properties available for sale across our different capitals. So what I have here are the total property listings on the left by city, and then what's happening to property prices right now from CoreLogic. What you can see is that when we look at Sydney right now, you can see that the number of listings is essentially flat. It sort of dropped towards the end of last year and has now started to come back up again. So essentially flat. And then if we look at the month-on-month growth rate, you can see that property prices are essentially flat according to CoreLogic. If we look at Darwin, we can see here that listings are quite volatile. They started to rise in 2023, but then have started to fall away again in 2024. And now if we look at what property prices are doing, you can see essentially flat. So you can see that the price growth here is reflecting what's going on in terms of the trend line from a listings perspective. Long term, Darwin is essentially flat. Let's have a look at Brisbane. Now, what you can see here in Brisbane is that after sort of late 2022, we can see the number of listings has started to fall away. That means supply has been decreasing, and you can see that property prices last month grew 1.2% in Brisbane, and you can see last 12 months prices rose 15.1%. Now, if we look at, say, Adelaide, for example, again, you can see listings since 2019 have been falling away and flat here and then falling away again. And you can see that property prices last month grew 1.4% in Adelaide. For the last 12 months, 13.3%. Let's have a look at Melbourne here. Now, Melbourne probably one of the weakest markets in the country, and you can sort of see that from the listings being relatively flat, and now we're starting to see an increase slightly. It'll be interesting to see whether this continues to increase or goes flat, but essentially while the long-term trend line of listings is flat, so that means supply isn't really increasing or decreasing, staying roughly the same, price growth is 0%, flat as well. But now look at Perth. You can see here that listings have started to really fall away from 2019, rapidly falling away, and you can see prices last month grew 1.9% and for the year 19.8%. Yeah, so what I just showed you are where listings are actually decreasing the most, and in these areas they're seeing migration both from overseas migration and domestic migration. So demand is rising at a time that listings are falling or supply is falling. But remember, there are two phases to supply. The first is listings, and you saw that in many markets where growth is flat, listings are staying roughly the same or increasing, whereas the areas where property prices are rising the most, the number of listings are actually starting to fall. But what about new supply, new builds? Last week, the Australian Bureau of Statistics, ABS, released data showing that only 12,400 homes were approved for construction in trend terms in February, the lowest monthly reading since April 2012, 12 years ago. And you can see that from this chart here, which shows the lines are falling away from 2020. On that run rate, Australia would only build 149,000 homes a year, 91,000 below the Albanese government's construction target of 240,000 homes a year. Data released by the ABS on Wednesday shows that there were only 37,200 homes commenced in the December quarter in trend terms, the worst quarterly result since June 2012, again 12 years ago. And you can see it again on this next chart with the lines looking at new dwelling commencements all falling down since 2020. If you break this down city by city, then you can really find out where the undersupply is the biggest. For example, in Brisbane right now, they're only building roughly one home for every 4.5 people who need one. In Perth, it's worse. There's only one home for roughly every 6.5 people that need them. So when you see major research houses coming out and telling you about how much they think property prices will rise in value, or major banks saying how much property prices will rise, you don't then just go and buy property anywhere thinking that these research houses are totally correct. What they're talking about is the trend, and the trend shows that property prices are likely to rise in multiple markets around Australia. However, as an investor, what you want to do is you want to find the best places to buy property, and that's why you want to look at where demand over supply is the highest. And look, if you want help to know more about how to do that, check out the link in the description below to get totally for free the audio version and digital version of my book. It's a complete property investing blueprint based on my now 22 years of property investment experience. I really hope you'll take advantage of this information, and if you can afford to, you do your due diligence and you get into the property market before almost everyone else who makes their decisions based on what they see in the mainstream media. They decide that now is a great time to buy, and they jump in, opening the floodgates, increasing property prices even more, increasing the rate at which property prices are rising. And for you, if you can take advantage of this information and jump into the market before the masses do, you can get a head start on everyone else. Good luck.